Hey everyone, John Hunter here from School of Trade, and today we're going to be taking a look at a spike and ledge pattern short here on crude oil. Just got filled short at 84.82, looking short for two contracts. Let's get our target in place here. First target down there, next target down at 84. Normally I front run these levels, but because it's a round number, 84, typically when they hit those dollar numbers, 84, 85, 86, usually slides through it a little bit. So we'll leave it at 84 unless we see reason to move it a little bit. So right now we're short two contracts, 84.82, looking at our first target, 84.42. That's going to put us at 40 ticks. Looking for the second target down here at 84 currently, at least, for another 82. So that puts us at 122 ticks total that we're looking for on the trade, and then we'll see. I missed the initial breakdown. You'll notice I'm entering a little bit afterward with a limit order hopping in here. The initial breakdown happened back here, but I was trading something else and I just missed that breakdown. Usually with these spike and ledge patterns, it'll snap back a little bit, test it, and then hopefully from there drop off. Now my first target down here at the 100%, 84.42, is a little bit aggressive because it is below the initial low. So if I start seeing any type of rejection at these lows ahead of this level, I'll just take the first contract off ahead of time. But I'm not really going to give it much leeway in terms of coming down to this low and then bouncing off, and I don't want to see that. So I'll leave my target where it is right now. Just keep in mind it's a little bit aggressive. If we have to move it, we will. So right now, it's looking pretty good. There was that big bullish run up here, but you can see how that candle closed is not so bullish anymore. So looking for kind of a follow-up move back to the downside with the size of this candle, probably an inside bar or something along those lines, and then a drop lower. So our stop is up at 85.24 at the highs of this consolidation. Honestly, the consolidation, I see it more like this, but for measurement's sake, actually that would have been even better entry, but for measurement's sake, we typically like using the extreme, so you have the high and the low. So that's why I'm entering a little bit farther down here at 82. So that's going to be the trade so far. Just need to give it some time to work out. It may take a little bit of time. We're coming into the 10 o'clock hour now. It's usually when we see a little bit of a spike in volatility, but we'll see what it wants to do. So we'll be back in a little bit, and we'll see if we can start getting these targets filled. All right, we're back. Just wanted to do a quick update here. I locked my stop in at 84.91 above that little kind of swing high back up there. And we formed that little inside bar. So some of you aggressive traders, you could definitely take this inside bar as another entry pattern to go short at 60. Actually, it just looks like we shot right through it. So I guess scratch that. It happened kind of quick, getting lots of volume coming in. Just a big block seller dropping in here. Lots of them actually. Wow, okay. We might actually get that target filled in one push. Well, there we go. Okay. Let's drop that to one contract. We'll move this to break even. And actually, since we have that big spiking candle with all that volume, I really don't want it to go back above that. So we can lock it in with a little bit more profitable territory at 79. Obviously, it's a very conservative stop. We are quite a ways away from price. Where the stop is right now, you'd be giving back about 40 ticks. But on the trade, we've already hit our daily goal of, typically we like 30 ticks per contract. We're already sitting up at 40. So nice place to be at already. And if it does come back and stop us out, so be it. We make back a little bit of commission and maybe enough food, enough money for the burger after work or something. So we have our stop locked in here, waiting for hopefully a little bit more continuation of the downside. Now we've just got our aggressive target down here at 200%. Again, it's at 84 even, so I'm leaving my target there at 84 just because it is a round number. Typically you shoot through those by a couple ticks here and there. So looking for another push down. We didn't get any support down here at that swing, so that's a really, really good thing. That does bode quite well. Now that level should act as resistance. So right here at 84.46, they should really honestly have a hard time breaking through that level. And if they do close past it, they're probably not going to close past it by much. So let's drop a line on there so we can just keep an eye on that level. Otherwise, we'll just be looking for that next drop lower to fill that target down to 84. So we'll be back in a little bit, and we'll see if we can get it filled. All right, we're back. Getting kind of a rinse and repeat here, getting just a huge amount of selling volume coming in again. Big drops. It dropped about 10 ticks in under a second. I'm going to lock my stop in a little closer, 84.39. Looking at 39s just because this little inside bar pattern here that dropped out of really shouldn't go back above that. Otherwise, it invalidates this whole move lower. So I'm going to lock my stop in at 39. If it does come back out and stop us out, we'll still get 42 ticks on the final target. I'd obviously prefer the 82. It looks a little bit better. But we're seeing some big volume coming in here, and just again, kind of like what we saw back here, all of a sudden it just rockets down, and then kind of found a little bit of a balancing point at that area at 84.46. And there's another one. Look at that volume coming in. Just big blocks of selling pressure coming in. One tick away from our target, and there we go. Got it filled at 84. Beautiful. So that was the spike and ledge pattern. It happened pretty fast. I got that 84 filled. I'm surprised that they didn't slide that level, 84. They're testing it right now. Typically when you hit these 84, like we were talking about before, 84, 85, 86, usually slide through at 6-7 ticks or so, and then, you know, kind of bounce up from there. But either way, we're filled at 84, only one contract, so not a big deal there. But that one contract locked in 82 ticks for us, so looking at 123 ticks on the trade overall, and just a beautiful, 122 ticks rather, just a beautiful trade to the downside. So spike and ledge pattern works again, it strikes again. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.